The idea of merging Tesla and SpaceX, Elon Musk's two flagship companies, has shifted from wild speculation to a topic of serious financial debate. What once seemed like a far-fetched scenario is now being discussed in boardrooms and on trading floors around the world. The possibility of combining two of the most innovative companies of our time is capturing the imagination of investors, analysts, and tech enthusiasts alike. Once just a fantasy among fans, analysts are now openly modeling what a combined Tesla-SpaceX entity could look like. They're running simulations, crunching numbers, and debating the potential synergies that could arise from such a bold move. The conversation has shifted from if to how and when, as experts weigh the benefits and risks of merging two giants at the forefront of electric vehicles and space exploration. The catalyst? Tesla's widening gap between its ambitious vision and the practical challenges it faces today. As Tesla pushes the boundaries of what's possible in sustainable transportation, it's also grappling with production bottlenecks, supply chain issues, and fierce competition. These hurdles have prompted some to wonder if joining forces with SpaceX could provide the resources and technological edge needed to overcome these obstacles. With mounting scrutiny and pressure to deliver, some on Wall Street see a merger as a strategic solution, not just a pipe dream. The financial community is abuzz with speculation, as investors look for ways to unlock new value and drive growth in an increasingly competitive landscape. A merger could create a powerhouse capable of reshaping not just the auto and aerospace industries, but the entire future of technology. Investment banks are publishing real reports, signaling the market is starting to price in this possibility. Detailed analyses are being circulated, outlining potential deal structures, regulatory hurdles, and the impact on shareholders. The fact that these discussions are happening at the highest levels of finance shows just how seriously the idea is being taken. The timing is crucial. Tesla stands at a crossroads, balancing revolutionary ambitions with manufacturing and financial realities. The company's next moves could determine not only its own future, but also the trajectory of the entire tech sector. As the stakes rise, every decision is being scrutinized by investors, regulators, and the public. As we dig deeper, it's clear, this merger talk is more than hype. It's a reflection of the high-stakes game at the cutting edge of tech innovation. Whether or not a merger actually happens, the very fact that it's being considered speaks volumes about the ambitions, challenges, and possibilities facing two of the world's most visionary companies. Tesla's story has always been about selling a dream: autonomous vehicles, robo-taxis, and humanoid robots. But the gap between Musk's promises and Tesla's actual progress is growing. Full self-driving remains elusive, and timelines keep slipping. Investors are now forced to confront a sobering reality. The future is arriving slower than expected. Excitement over new ventures is tempered by slow progress on existing promises. Analysts are questioning if Tesla can bridge this gap alone, or if a radical move, like merging with SpaceX, is needed. The market's patience is wearing thin, and the pressure to deliver is mounting. This tension is fueling serious consideration of bold, strategic moves. The merger speculation is rooted in Tesla's current financial strain. Recent forecasts show Tesla's revenue growth slowing and operating margins shrinking below 3%. Cash flow is a major concern. Jefferies projects a $1.9 billion cash burn in Q1 2026 and a negative $5.5 billion for the year. Capital expenditures are set to surge to $19.20 billion annually as Tesla invests in new factories and tech. This means Tesla is burning cash just as its core business faces headwinds. The company can't fund massive projects from a shrinking profit pool forever. That's why tapping into SpaceX's resources is now seen as a strategic imperative. The financial squeeze is real, and it's driving the merger conversation. Tesla's robo-taxi network is central to its future, promising a high-margin, driverless ride-hailing service. Musk set an aggressive goal for a 2026 launch, but analysts are skeptical. Regulatory hurdles and slow-moving approvals make a rapid rollout nearly impossible. Tesla's vision-only approach to autonomy lags behind competitors using LiDAR. The technology isn't yet reliable enough for full autonomy, and public trust is a major barrier. Jefferies doesn't expect meaningful robotaxi revenue before 2027, if then. The project is a high-stakes gamble with a distant, uncertain payoff. This uncertainty adds even more pressure to Tesla's finances. Tesla's Optimus robot aims to revolutionize labor, but the path to commercial success is long and uncertain. Building a general-purpose humanoid robot is a massive engineering challenge, requiring breakthroughs in AI and hardware. While Tesla has shown impressive prototypes, mass production is years, if not decades, away. The field is crowded with competitors like Boston Dynamics and Figure AI racing ahead. Tesla won't have the first-mover advantage it enjoyed with EVs. The financial risk is huge, with no guarantee of near-term returns. Optimus adds another layer of strain to Tesla's already stretched resources. Imagine a world where Tesla and SpaceX join forces, creating not just a partnership, but a financial and technological powerhouse. By merging, these two giants could pool their vast resources, unlocking new levels of funding for bold, transformative innovation. The combined strength would allow them to take on projects that might be too risky or expensive for either company alone, fueling a new era of progress in both transportation and space exploration. SpaceX's growing profitability and steady cash flow could help offset Tesla's significant capital needs for ambitious projects like robotaxis, the Optimus humanoid robot, and next-generation battery technology. This financial synergy would provide a safety net, making it easier to weather economic downturns and invest in long-term visions without constantly worrying about quarterly results. The merged entity could self-fund moonshot bets, ventures that push the boundaries of what's possible, freeing Elon Musk and his teams from the relentless pressures of short-term market expectations. This freedom could spark a wave of creativity and risk-taking rarely seen in the corporate world. The technological synergies are enormous. SpaceX's expertise in building resilient, mission-critical systems could directly benefit Tesla's vehicles, making them safer, smarter, and more reliable. Imagine electric cars with the durability and redundancy of spacecraft, or autonomous systems that learn from both terrestrial and orbital environments. At the same time, Tesla's world-class manufacturing prowess could help SpaceX scale up Starlink satellite production, making global internet coverage more affordable and accessible than ever before. Together, they could form a vertically integrated tech giant, controlling every step of the process, from designing batteries and building electric vehicles to launching satellites and managing data networks. This level of integration would be unprecedented in the tech world. Such integration would not only accelerate innovation but also provide a formidable competitive edge, allowing the company to outpace rivals and set new industry standards across multiple sectors. Ultimately, this merger isn't just about money or market share. It's about building a foundation for the future, where technology, sustainability, and exploration are seamlessly connected. If realized, it could become the ultimate platform for Elon Musk's most ambitious visions, shaping the world, and perhaps even other worlds, for generations to come. Despite challenges, Tesla's strengths are undeniable. Its vertically integrated model, designing chips, software, batteries, and manufacturing equipment in-house, gives it unmatched control and agility. This allows rapid innovation and cost reduction, outpacing traditional automakers. Tesla's ability to scale production with massive gigafactories is a major barrier for competitors. Few rivals can match Tesla's industrial might or replicate its business ecosystem. These strengths provide a durable competitive advantage, even as others catch up on features. Tesla's unique structure reassures investors it can eventually deliver on its vision. Its foundation remains strong, regardless of short-term financial turbulence. Traditional valuation metrics can't capture what drives Tesla's stock. The company trades on narrative and belief in its long-term innovation, not just current earnings. Investors are buying into Musk's vision of a sustainable, autonomous, AI-driven future. Tesla's stock often moves more on sentiment and announcements than on quarterly results. Analysts must weigh the odds of moonshot projects paying off, not just crunch numbers. That's why, even with cash burn forecasts, some analysts raise their price targets. The valuation is a tug-of-war between present risks and future possibilities. If even one big bet succeeds, the upside could be enormous. At its core, Tesla's value, and the ongoing speculation about a potential merger, rests not just on numbers or technology, but on a powerful belief. This belief is shared by investors, employees, and fans around the world who see Tesla as more than just a car company. It's a symbol of innovation, disruption, and the promise of a better future. The stock price is more than a simple reflection of earnings or quarterly results. It acts as a barometer of faith in Elon Musk's ability to deliver a radically different future, one where electric vehicles, clean energy, and even interplanetary travel are within reach. Every spike or dip in the market is a pulse check on collective optimism. A merger with SpaceX would amplify this narrative dramatically, uniting two of the most ambitious ventures under one visionary roof. It would signal to the world that the boundaries between earthbound mobility and space exploration are blurring, and that the future is being built by those willing to dream and invest big. The combined company would not only build the future of mobility on Earth and beyond, but also inspire a new generation of engineers, entrepreneurs, and dreamers. Investors and top talent would be drawn to this bold vision, eager to be part of something truly transformative. Such a move would insulate the company from short-term market pressures, allowing it to focus on massive, long-term bets that could redefine entire industries. It would give Tesla and SpaceX the freedom to pursue breakthroughs that might take years or even decades to realize. Whether or not the merger ever happens, the very discussion highlights Tesla's unique place at the intersection of technology, finance, and human ambition. It's a company that thrives on big ideas and even bigger risks, constantly pushing the boundaries of what's possible. For Tesla, sentiment isn't just a byproduct of its journey. It's a critical asset, a driving force that fuels its relentless push into the unknown and keeps the dream of a revolutionary future alive.